Hello and welcome to Trade Finance Talks. I'm Mahika Ravishankar, Deputy Editor at Trade Finance Global, and we're coming to you from the 51st Annual ITFA Conference in Singapore. I'm joined today by Gwen Mwaba from Afreximbank, and we're going to talk about the trade finance gap, particularly in the context of Africa. Gwen, thank you so much for joining me today.
Thank you very much for having me, and it's lovely to see you again.
So we'll start with some introductions quickly. Just tell me a bit about your background and your role within Afreximbank and what brings you to ITFA this year.
Thanks very much again. So my name is Gwen Mwaba. I'm the Managing Director for Trade Finance and Correspondent Banking at the African Export and Import Bank. I'm a career banker. In the last, I would say, 15 to 20 years of my career, actually, I found myself focusing on the world of trade, mainly structured trade and commodity finance, and now just all things trade related. I come to ITFA today because, first of all, ITFA is a very important industry body for trade financing. Afreximbank is a contributor to ITFA on various levels through the board advisory panel, but also through the Africa chapter of ITFA. So it's great to be at ITFA to meet, old friends and industry players so we can move the trade financing business forward.
And kind of on that note, I saw you speak on a great panel yesterday about the persistent trade finance gap, which has remained stubbornly at $2.5 trillion. And you were joined by members of the Asian Development Bank and the IFC. I'm wondering, what do you think is the role of international financial institutions collaborating to narrow this gap?
Yeah, you're right. That trade financing gap continues to persist. And even within Africa, the subset is still hovering at around 89, 90 billion. So there's no movement. So the global trend is very similar to the African trend. So it's quite clear that no single institution can solve the problems of this trade financing gap on its own. And collaboration then becomes key. So the multilateral development banks, for example, have decided to formally come together. There was a meeting of the heads of all of the MDBs, and they have committed that we will work together to narrow this trade financing gap, because we have to collaborate and pool our capacity and collaborate on programs in order to address this issue.
Yeah, what does collaboration really look like?
So collaboration, I think, comes on several levels. It could be collaborating through capacity building, where we share expertise. When we are hosting an event, I might have people from another MDB come and join our event and vice versa. Collaboration is also at the transactional level, where we pool our capacity. If, for example, I have limits into a country of a couple of 100 million, but the country needs 800 million. I might need fellow MDBs to come and bring their capacity as well, so that we can then serve that particular industry. Another level of collaboration also comes in through, jointly brainstorming and implementing new programs that speak to a particular segment within the trade financing world. So it's multifaceted.
Thanks. And I want to talk a little bit about those groups in global trade networks that are underrepresented, mainly SMEs who struggle to access financing, but also, particularly in the African context, women-owned businesses. Could you tell me a bit about how institutions can work to improve their access to financing?
Yeah, you're absolutely right. SMEs continue to suffer the highest rejection rate when it comes to access to finance, for various reasons that we've spoken about before, right?
Yes.
But that doesn't change the fact that they still need to access financing. And you're right, women-owned businesses are particularly impacted because the majority of SMEs are actually owned by women. So the way that we could address this problem, I think, entails looking at financing this group differently. We can't finance them the same way that we finance large corporates or even larger SMEs. But they are, because within the SME group also there's micro borrowers, there's small borrowers, and then there's the, sort of the ones on the top end of the SME segments, and I'll address it in those tiers. When you look at the more established SMEs, those who are able to access short-term or term contracts with buyers, you can implement programs like the supply chain financing program using payables finance because they have established contracts. So that's fine, they're catered for. But what about those that are in the lower tiers? And then you have those SMEs that perhaps can't access term contracts or with good counterparties, but they are making supplies, regular supplies to buyers. Maybe the buyers are not so big, but they have these invoices and they're not going to be paid. You could use factoring, for example, as a tool to help them accelerate, their trade cycle. And then you have the micro borrowers, and these are usually sometimes even falling outside the entire banking system, but they're trading huge amounts of money within countries cross-border. Fortunately, we've seen an emergence of fintechs come into this space, and the fintechs are able to finance that segment, but also the telcos who, through provision of small overdrafts on airtime through mobile money payment systems, are able to tackle that segment. So, and I think we have to embrace these types of innovations because they're actually solving a problem that the banks can't solve directly.
And especially within Africa, I've been following the growth of fintechs quite a lot. And I know we discussed the prevalence of women-led businesses when we spoke during Women in Trade, Treasury and Payments TFG's event back in February. So kind of fintechs leads me to a nice segue on the theme of technology, which has obviously completely transformed the way trade is conducted in the last few decades. But do you think that technology has helped or hindered in terms of closing the trade finance gap?
I would say intuitively it's probably helped. I think the only issue is anybody measuring the impact of fintechs? Because if you consider a few years ago when we didn't have the fintechs, playing in this space, we had this trade finance gap. So if you then assume that the fintechs come in and they cover part of that segment, then the outcome should be that they are making an impact towards closing the gap. But I think the issue is we're not really seeing anybody measuring that. And if there is anybody out there that is measuring this impact, I think it would be great to share this data so that we can actually see the impact that these fintechs and telcos are making in this space. So they're a welcome addition.
Yeah, that's a great call to action if someone wants to take up that responsibility. And to close off the interview, I guess we've touched on it before, but looking back to, say, the year 2000, the words trade finance gap were pretty scarcely used. Now, at many of these events, I hear the phrase all the time and the figure of $2.5 trillion cited often. But is this all just white noise, or has it resulted in any tangible change?
So first of all, the trade finance gap is real because it's measured. If it was just talk, we wouldn't have data to back it up. We have surveys that are done annually. I think the Asia Development Bank does a global survey, which brings up the findings of the 2.5 trillion. The African Development Bank also does a Africa Focus survey, which also feeds into the Asia Development Bank survey. And they come up with a figure of Africa's gap that sort of, meanders between 90 and 110 billion every year. So at least we've established that the gap is real through data and facts. However, when it comes to action, calls to action, and making sure that we close that gap, I would say yes, there are many, many parties that are really being very intentional now about how we tackle and address this gap. Previously, everybody worked on their own and scurried along and tried to introduce programs. But I think working individually is not really the solution. And as I'd mentioned earlier, I think collaboration is the key. This is why you're seeing the MDBs collaborating. But even with commercial banks, MDBs are working closely with commercial banks, international banks, local banks. It's not about competition. We're not competing. We're all just working together towards a common goal, which is closing the trade financing gap. And it's quite a nice space to be in where you can be collaborators rather than competitors. It's a healthy competition, but working towards the same goal.
That's a really optimistic note to end things on. Thank you very much for your time. Lovely speaking to you as always.
Thank you so much for having me.